Welcome back to Investing Talk Podcast. Today, we're really zooming in on just one single massive catalyst. It's the upcoming Q3 earnings for a company that is, well, absolutely critical to the entire semiconductor sector.
Yeah, that's right. And this isn't just, another earnings report we're flicking through. We are watching ASML very closely. They're the Netherlands-based leader in lithography systems.
Right. They don't design the AI chips themselves, but they make the machines.
Exactly. They are the only provider of those really advanced machines, the extreme ultraviolet or EUV systems. You simply cannot make the highest-end chips without them.
So ASML becomes this key indicator, almost a bottleneck for the whole industry. Its results really tell us a lot about the health, the conviction behind this global AI boom, and next-gen chip growth.
Which is precisely why the big institutions are watching so keenly. They want to understand its future trajectory.
Absolutely. And look, if you find this kind of focused analysis valuable, please do take a second to subscribe, like, and comment on the video. It really helps us out.
Yeah, and let us know if there's a specific company you want us to dig into, maybe their catalysts or upcoming earnings. Just drop a comment below. We do read them.
Okay, so let's set the stage. The Q3 report is expected around October 16th. What's the story leading up to this? What kind of momentum has ASML built?
Well, the last quarter, Q2 2025, they set an incredibly high bar. The numbers were really strong.
How strong?
7.7 billion in sales. And maybe more importantly, a really robust gross margin at 53.7%. Very healthy.
Wow, okay.
And that flowed through directly to shareholders. They increased their interim dividend pretty quickly after that. The ex-dividend date was just back in late September. It signals real confidence from management.
That's a strong signal, boosting the dividend. But hang on, isn't there a risk there? We keep hearing about macro uncertainties, especially looking out to 2026. Some analysts seem worried.
It is definitely a calculated risk, you could say. But I think it just underscores how confident management feels about the near-term pipeline, at least. And you know what? Institutions seem to agree.
Oh, yeah? How so?
We saw some major players. Global Assets Advisory, LLC, was one mentioned, really upping their stakes significantly. And that's not just general market optimism. It feels more like a focused bet that this semiconductor upcycle, the one driven by AI, is real and has legs.
Okay, so the financials were strong, institutions are betting on them, but the company's also been making moves strategically, right? Not just counting the money. I'm thinking about that Mistral AI partnership.
Absolutely. That's a key one. That collaboration is aimed squarely at, advancing chip production itself, but also integrating AI into their future lithography tools. It shows they're prepping their tech for the next big leap in computing.
And the new CTO appointment.
Right. That fits the pattern.
Yeah.
Appointing a new chief technology officer just this month, it reinforces that focus. It suggests a real emphasis on long-term R&D, maybe even prioritizing that over just cranking out volume in the short term.
Makes sense.
And all these steps, combined with the general positive feeling around chips, look at AMD, NVIDIA, it's helped push ASML shares up to a 12-month high recently.
Okay, so a strong runway, it seems, based on recent performance in these strategic moves. But let's get down to brass tacks. The Q3 print is next week. What are the actual numbers the street is looking for?
So the report's expected October 16th. It covers the quarter that wrapped up September 28th. Now, the company's own guidance for Q3, what they told us last time, was for revenue between EUR 7.4 and 7.9 billion.
Got quite a range.
Yeah, and for gross margin, they guided 50 to 52%.
That margin guidance, 50 to 52%, that's interesting, especially when you just said they hit 53.7% in Q2. So that implies what? Either they're being cautious or they expect maybe a different mix of products sold?
Exactly. It could be either of those. Maybe less high-margin EUV, more DUV, or just managing expectations. But as for what analysts specifically are forecasting...
Yeah, the consensus.
The consensus, as of, basically today, is looking for revenue of EUR 7.64 billion.
Okay, so right in the middle of their range.
Pretty much. But interestingly, if they hit that 7.64 billion, it would actually be a tiny dip, less than 1% compared to the 7.69 billion they did in Q2.
Huh. And earnings per share?
The consensus for EPS is EUR 5.95, and that's on a GAAP basis. Generally accepted accounting principles.
Right. But what about the number that really matters on earnings day? That whisper number, the one the traders are actually watching.
Ah, yes, the whisper. The market's sort of informal expectation for EPS, it's actually a bit higher. sitting around EUR 6.90 right now.
So 15 cents higher than the official consensus.
Exactly. And that little gap, that's often where the real pressure is. The stock often trades on whether they beat that whisper number, not just the headline analyst figure.
And historically, ASML tends to beat the consensus, right?
Yeah.
But the stock reaction isn't always positive. What does that tell us?
It tells you that the Q3 number itself, the backward-looking result, is almost secondary. The real game, the real trade, is always about the forward guidance.
Always about what's next.
Always. I mean, yeah, they've consistently beaten EPS consensus lately, usually by maybe 2-3%, something like that. But the stock reaction after earnings, all over the place, sometimes down percent, sometimes up 3%, a small beat just doesn't cut it.
Right.
The real needle mover, the thing that will actually drive the stock significantly, is going to be the tone, the strength of their outlook for Q4 and any commentary they give on 2026.
Okay, that frames it perfectly. So beyond just revenue and EPS, if guidance is the key, what specific metrics should listeners be really watching closely in the report to get a sense of that future visibility?
Net bookings. No question. That is the #1 lead indicator for their pipeline. It's basically future revenue locked in from customer orders.
And what were bookings last quarter?
In Q2, net bookings were EUR 5.5 billion. But the key thing to watch within that number is the EUV component. That was about 2.3 billion in Q2. Investors need to see if that high-value EUV demand is holding up or even growing. That signals real long-term commitment from the big chip foundries.
Makes sense. And on the profitability side, that gross margin number we talked about.
Yeah, gross margin is crucial. It shows their pricing power, basically. And also how well they're managing their, complex and expensive supply chain mix. Remember, Q2 was 53.7%, way above the midpoint of their Q3 guidance range.
So if they manage to stay above, say, 52%.
If they can hold it above 52%, despite any expected mix shifts, that would be a very, very bullish sign about underlying demand strength and their operational efficiency.
Okay. And there's also that steady sort of recurring revenue stream, right?
That's right. The installed base management revenue. Think of it as their service and maintenance contracts on all the machines they've already sold. It was about 2.1 billion in Q2.
Not insignificant.
Not at all. And it's important because it's generally recurring, quite stable. It provides a nice floor cushion, especially during times when some big clients might temporarily pause spending on brand new machines.
Okay, so we've covered the numbers to watch in the Q3 report. Bookings, margin, the service revenue. But you said guidance is key, and the biggest factors influencing that might be outside the quarterly results themselves. Let's look at the calendar, the broader industry context. What near-term events could sway the stock besides the earnings print itself?
Well, like we said, the guidance itself is paramount. How strong is it? How confident do they sound about the AI-driven cycle continuing? But beyond that, yeah, there are other things. There are some technical market events coming up that can create volatility, regardless of the company's fundamentals.
Like what?
We've got a major ETF rebalancing scheduled for October 29th, and then the institutional buy window, that sort of period when big funds often put money to work, that opens around December 2nd.
So these aren't directly tied to ASML's performance, but they just force big pools of money to move around, potentially impacting the stock price.
Exactly. It's just technical flow, buying or selling pressure that's not necessarily based on news. And then there are broader industry signals, too, like the holiday demand outlook report that usually comes out around November 25th.
And that gives hints about?
Well, about consumer tech health,
Yeah.
overall spending plans for tech companies, how are PC sales looking, smartphones. That eventually filters down to capital spending plans, and that affects ASML's future orders down the line.
Right, it all connects. Okay, let's pivot now to maybe the biggest tension point for ASML. You've got this incredible technological dominance on one hand, but these significant geopolitical risks on the other. Let's start with the risks. What are the main headwinds analysts are worried about?
The big one, the one that keeps coming up, is definitely geopolitical and regulatory. Specifically, the chip export controls to China. The Netherlands and the EU formally ratified the latest round of controls back in September.
And this isn't just noise, it has real teeth.
Oh yeah, China's a huge potential market. These controls limit the sale of their most advanced systems, and even some of their slightly older but still critical DUV deep ultraviolet equipment. any hint that these controls might tighten further or expand, that's a direct threat to their growth forecasts.
How seriously are analysts taking this China risk?
Very seriously. You saw Barclays, for instance, recently downgraded ASML. They went to hold, and they specifically called out the China exposure and that regulatory uncertainty as the reason.
But not everyone agrees.
No, definitely not a consensus view. You still have firms like UBS, Goldman Sachs, who remain quite bullish. Their argument is basically that the demand for EUV, especially from places like Taiwan, the US, for leading-edge chips, is just so strong it'll offset the China limitations.
So a real tug-of-war in analyst opinions there.
Absolutely. And that tension is precisely why getting clear visibility for, say, 2026 is so difficult right now. It's clouded by these macro worries and the export control questions.
Okay, so that's the risk side. What about the flip side? The optimism? What are the sort of technological breakthroughs or maybe even speculative catalysts that have the market excited?
Well, the biggest buzz on the tech front is definitely around their next generation system, the high-NA EUV machine.
High-NA?
High numerical aperture. Basically, it allows for even finer details on the chips, essential for getting down to 2-nanometer processes and beyond. The rumor mill is churning about potentially accelerating customer shipments of these new high-NA tools. If the qualification process is going better than expected, getting those into fabs sooner would unlock pretty significant new revenue streams, maybe faster than people thought.
Right, that would be big. And then there's the AI angle everywhere.
Yeah.
How does ASML plug into the massive spending we're seeing from the cloud giants, the hyperscalers?
Yeah, the speculation there is huge. There are constant rumors that the hyperscalers are gearing up for just exactly. If these massive new AI infrastructure projects demand their most advanced lithography tools, that could just turbocharge ASML's order book. Plus, you always hear background chatter about ASML possibly looking at smaller acquisitions, maybe buying some AI-focused lithography startups to keep their tech edge really sharp.
Okay, so you've got this huge potential upside from AI spending butting right up against the very real risk of those geopolitical export controls. It sounds incredibly volatile. Given all that, what's the market actually pricing in right now? What's the sort of calculated risk-reward setup look like today, October 13th?
Yeah, volatile is the right word. The market is definitely braced for a move. If you look at options pricing, the implied volatility is extremely high. It's sitting up in the 99th percentile for the whole year.
Wow, 99th percentile. So for listeners maybe less familiar with options, that means the market is expecting a bigger swing around these earnings than it has almost all year.
Precisely. It's basically pricing in a much higher chance of a significant move up or down. It's not expecting things to be quiet.
And can we put a number on that expected move?
Yeah, based on the current options prices, the market is implying an expected move for ASML stock just for the week of earnings of roughly plus or minus 5.2%, which translates to about a $50 swing in the share price, give or take.
That's a pretty big potential move. Okay, so let's try and break down the probabilities for folks listening. What are the likely scenarios?
Okay, let's think in terms of probabilities. The most likely scenario, call it the base case, analysts are putting maybe a 55% probability on this. This is where revenue and EPS land somewhere near the midpoint of the company's own guidance. So revenue between, say, 7.55 and 7.7 billion.
And the stock reaction in that case?
Probably pretty muted. That expected plus or minus 5-6% move we just talked about, because if they just meet expectations, all the focus instantly snaps to the forward guidance, which is the real unknown.
Okay, base case is meeting expectations. What's the best case scenario for bulls?
The bull case, maybe give that a 25% probability. This would mean they have to clearly beat the high end of their guidance range. Revenue maybe 7.8 to 8.0 billion, strong EPS beat, and crucially, accompanied by very positive, confident commentary about Q4 and into 2026.
And if that happens?
That kind of upside surprise plus strong guidance could potentially drive the stock up maybe in the plus 7% to plus 10% range.
All right. And the downside, the risk case.
The bear case, let's assign that maybe a 20% probability. This is where revenue and EPS come in towards the low end of the guidance, maybe 7.4 to 7.55 billion. This could happen if EUV orders were softer than expected, but more likely it would be driven by a really cautious forward outlook for management.
Cautious because of?
Because of those macro concerns we talked about or heightened worries about the export controls impacting future sales. If they sound worried about 2026, that could trigger a sell-off, potentially in the negative 6% to negative 9% range.
So summing that up, the overall leaning seems kind of neutral to maybe slightly positive, but with that huge asterisk about China and the export situation being the real wild card.
That's a perfect summary. Neutral to slightly positive bias based on current trends, but that China export volatility could just override everything else in an instant. It really is the key variable.
Yeah, it really crystallizes the picture. ASML is, undeniably benefiting from this huge AI wave. Demand for their top-end EUV machines seems strong. They're innovating strategically. But these regulatory chains on the global supply lines, that seems to be the single biggest factor hanging over its path forward.
And that really is the key takeaway for you, the listener, the learner here. Understanding what happens with ASML is so critical because its earnings report especially, that guidance and those booking numbers, it acts as a really clear, almost unfiltered signal about the strength, the duration of this entire AI-driven chip investment cycle. Not just for ASML, but for the whole sector.
If ASML sounds cautious.
If ASML sounds cautious, you can bet the entire semiconductor sector is going to pay very close attention.
Okay, so we know the short-term focus next week is squarely on those Q3 bookings, the guidance, and the immediate stock price reaction. But maybe the real long-term question for you to chew on is this. Can ASML pivot effectively? Can its strategic partnerships, its R&D, like pushing those high-NA EV systems out faster, can that accelerate enough to sort of structurally overcome these persistent macro and geopolitical risks that are making that 2026 outlook so murky right now?
That's the multi-billion-dollar question, isn't it?
It really is. Keep that question in mind, because how ASML starts to answer that next week could really determine whether the stock is viewed as a long-term cornerstone of the AI revolution or maybe more of a short-term geopolitical football. We'll definitely be watching. See you next time.